Hey guys, how's it going? It's MC Fire back again. We are this is the February the 6th recap video. We didn't have a video yesterday. We do have religious observance pretty regularly. So no video yesterday, but if you were watching the market, not too much happened. The market's kind of milling about where it's milling about at. And so the idea of having a video was kind of good that we didn't have one yesterday because we didn't want to execute a lot of time. But let's kind of dive in right now and kind of show you guys where we're at. So here we have a good old handy dandy bar charts. I'll go ahead and zoom in for you guys so you guys can see kind of what's going on here as regards to sector rotation and seeing where we are. So overall, market kind of recovering, showing some signs of strength in the tech sector as well as signs of strength everywhere else. We kind of like these markets because overall, high tide raises all boats, and it gives an opportunity for us the things that were on sale to kind of get them in a general direction of an uptrend, right? So this is good. This is good for us in all sectors. We're seeing green in most sectors, including like even real estate. So you saw XLRE recently got stopped out on XLRE because of the gray there. That is your real estate sector. So if you guys can't see that, I'll zoom in a little bit more to kind of show you the gray. That's your real estate sector, and it's generally trending to the upside. It happens as the market shifts. We thought there was going to be some more weakness there, even though the market is pushing to the upside, but high tide raises all boats, which we are not opposed to. So we'll bounce over here to the charts and give you guys some insight on what we had for our play. So we did close that those XLRE positions. Now there is still some weakness in our other play that we had in that sector. We'll bring him to the front of the classroom. We're also probably going to get this. No, we actually changed our mind because this is a trend change, and recently got stopped out with this one, or I pulled it early. It was, you guys saw that it was like a mishap. We did some live trading and pulled out of it slightly early, but at least we could have taken that to the reversion to the mean trade. Not going to chase that. We'll take the lick and we'll keep moving. But we closed out of that DLR trade unfortunately. But let's go hop over to O there, Realty. And yeah, we're still in this one because the risk to find is from this setup candle here. So pretty wide stop, but it's giving us a little, taking some heat off our, but we'll just wait and see what happens there. Overall, in the broader market, like the Qs and the SPY, you're seeing it really kind of push to the upside there. Which is a breath of fresh air. We are bullish on the Qs, and overall, the portfolio is bullish on the Qs and the SPY and stuff like that. Highlights of that in VDA, actually in this area, not looking too bad for potentially a buy. But now, if you notice, we do have a trend change. So there's a major trend change on in VDA. Might have to, after reversion to the mean goes into effect, might have to reevaluate. Do we need to? We'll move this mark up a little bit as well, or actually, we'll just add another one halfway between. Do we need to reevaluate our positions in NVIDIA due to the fact that we have a new trend in respecting that trend? Okay. You also have, we'll bring to the front of the classroom, Apple, then we'll get to some in plays. As you can see here, Apple also making a slight recovery, making higher lows temporarily. It is still in a defined uptrend. So made some really good profits on Apple here from the setup on the daily chart here. If you look on the right-hand side of your screen, there's a green arrow indicating our entry. A light green indicates partial profit taking, and then close it out here for very nice profit there. Overall, really enjoying that Apple is recovering. We're looking to see a little bit more from Apple. Earnings weren't too bad. Also, we'll get into some of the hot takes that we're looking for, but also you see Google here as potentially a bargain in Google. So if you can get above this level, you do have a setup candle here Nice gap for Google from the highs on the earnings, and then it made a ridiculous gap down here. So could be looking potentially for maybe like a squeeze, if shorts get squeezed off here, or maybe buyers step in to capitalize. That's the idea because we are in an uptrend. Nice pullback into the moving average cloud on the weekly here, but would love to see a nice bounce and a break above that 194 level there. So let's get into some hot takes real quick. We're gonna bring to the front of the classroom. Oh, is this linked? Probably not. Might not be linked. Nope, it's not. We're gonna link it. So you've got MCH. This is all from yesterday. So MCH, if you notice, it is in a downtrend, and nice juicy rip up here that did get washed, and then there's some follow through the next day. Um, really choppy stuff there. So not necessarily something that I would say uh look to take to the downside. Because the 21 is up, unbalanced volume is up. Just kind of wait and see. Wait till it goes into uptrend and wait for your ideal setup. Land nice juicy pullback in there. Bank of America, shout out to the XLF. It's still coming in extremely strong. We gotta bring that to the front of the classroom here. So XLF is just push, 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 right? Took some off, closed some positions here. I believe we still might have a position in XLF to the upside. But or we might have closed a position, some of it because of this nasty pullback. But it is back kind of towards highs there. So XLF, shout out to XLF making huge profits there. That was one of the ones inside. This is Bank of America, one of the ones inside of the XLF. So it's contributing to that intense rally that they're having. Right. There's some other ones, but Bank of America definitely is in the starter. So you've got Merrick. We talked a little bit about Merrick. We told you that there was some selling pressure, but there's not necessarily a trigger to trade, and this is kind of the result here. With Merrick selling off in like a descending triangle, we marked that out for you guys and brought it to the front of the classroom. Earnings did better, but the stock still sold off pretty considerably. So if you have a buy bias on something like Merrick, as you can see here, is respecting this level if you have a buy bias. If it wasn't on your radar, you don't have a buy bias for Merrick, don't even bother. Because it's in a defined downtrend, and unless you want to be a holder of the stock at 87, don't even worry about it. Wait for the uptrend there. Disney. So you've got Disney here, nice juicy pullback for the good old Disney. And remember, these are earnings. This is why sometimes it's not necessarily a bad idea to not trade through earnings, because yeah, there's going to be a violent move, but it needs to be like sustainable. So we like sustainability because we don't like to have to be hampered by having to look at the charts all day, and like earnings, you're going to have to micro that position if it doesn't move in the direction that you want and sustain that move in the direction that you want. So it's one of those things where it popped and then immediately dropped and just follow through to the downside. It is an uptrend though, so something to watch. But it had that the setup candle yesterday, so shout out to it. CTVA also nice juicy pullback here. Not quite where we want it. We want to see a nice setup red candle in green territory. So we'll be waiting for that. You've got Duke Energy. Shout out to Duke. Nice juicy setup candles here for Duke. Um, we marked this one up. I would say this is probably one you would want to consider taking to the downside. There is nice, like I'll bring it to the front of the classroom here. Right here, there's a head and shoulders pattern. Boom. There's the shoulder. There's a head at the high, and there's another shoulder, and then what do you see? Nice follow through. So to the downside, there's your pretty nice head and shoulders pattern there. It didn't advance, but pretty nasty failure going into a downtrend. Now here, now we're in a downtrend post earnings, or earnings coming up. If we can get a break below that 112.42 level, yeah, game is on, because it's a nice setup candle and a couple of these are stacked close. So if you can get some follow through to the downside, people that necessarily didn't get paid if they're long are releasing their positions. Trap traders there. SPG, a very nice pop post earnings as well. Just really good follow through in a squeeze there. So Simon Property Group in the lineup for real estate, contributing to our stop out in XLRE. So shout out to Simon. It's one of the stronger ones in the XLRE, for sure. And what is something that I think we have in our portfolio as well, Simon. So shout out to Simon Property Group. PM, bring him to the front of the classroom. Kind of similar story, right? Get a nice juicy setup candle right here. And then our earnings, well, bam. So somebody stacked the deck and it was tight, and then they get a massive explosion into 146. So very, very nice move. They're hitting the 3 ATR wall on the 3 ATR wall on the weekly. So really, really above range there. And shout out to a changing trend and really running screaming to the upside with a nice squeeze here. Like I say it's a squeeze because price action is barcoding, but it has to be Bollinger Band inside the Kellner channel for it to register. Something to think about. MDLZ, very, very been in a very defined downtrend for a minute here ever since the trend change, and got caught up in that trend change a while ago, like maybe a couple months ago, but I have since not taken a trade on this guy. It's just a setup candle as of yesterday, buying into the moving average cloud, but we'll see if it goes into accumulation at this point. Google, we already kind of covered Google, and then PEP. Bringing PEP to the front of the classroom, we told you guys about PEP because of this setup candle right here broke below the low. We would stop it at the high, and then nice follow through blowout candle here on earnings. Probably would let it go. Now PEP might have some more room to run on the downside. I think is unlikely because of this, right? If you see in this, no bueno there. We did take a stop out on PEP. It was small. But yeah, we took this play, and it did end up following through later. We just are respecter of our rules, and that's kind of what I want to bring to the front of the classroom. Is respecting your rules is more important than just getting all the profits, because your edge overwhelmingly is going to be successful, but sometimes it doesn't always work out in your favor. Hindsight's 2020, so this could have went to the upside into the cloud and really took off, but this one went to downside in a very considerable way and really took off. Would have been nice to be privy to this. Multiple blowout candles like right here, right here, right here. Would have gave us very good profit taking locations to go ahead and exit at a very nice profit. This is the first one here. Would have rolled that, rolled that. The methodology is very similar to what we saw in Johnson and Johnson. Almost picture perfect there. So you got a new defined downtrend. I'll bring it to the front of the classroom here on the weekly. New defined downtrend ripped into the cloud, and then you see a setup candle get washed here on the daily. It's already highlighted, right? Rip into the cloud, cross below the low of that setup candle, and then very nice follow through to the downside with a nice, profit taking here to eliminate all risk. Then you get a blowout candle here. A couple days later, took the extension to the downside as it broke that key level, and then closed it out here before it started to trend sideways, and then eventually bounce back, coming back home to the 8-pair moving average. So getting out of the way of that, is there a position on Johnson and Johnson right now or PEP right now? Not necessarily. You want to catch those new ideal trend changes is ideal in the setup candles inside of this. So these are going to be more of your higher probability setups, new trend change pulling back into that. That's kind of what we're seeing a little bit on NVIDIA, right? If we start getting setup and pullback inside, this is on the daily here on the right hand side. If we start getting some pushes up here and then cross below a setup candle, might be something you have to watch. So you can't just take your bias unless you're just okay with holding that stock, holding the risk, and then kind of stick to that. But if you're not okay with that, make a plan and then move accordingly. So we'll bring some of the other ones to the front of the classroom, like we'll bring the YM, the gold and silver to the front of the classroom as well. You've got YM there. YM. Mini Dow. Bringing Mini Dow to the front of the classroom here. So you got the Dow pulled up and kind of peekabooing high. Remember, this setup candle here was really good. If you guys got the Dow, shout out to you if you took that. We've got some really good follow through on the Dow there. Uptrend, nice juicy setup there. We'll also bring GC to the front of the classroom and silver. So if you guys have been following this channel for any length of time, we have been in an inflationary narrative as regards to like increased volatility and what's going on around the world, and the flight to safety is real, reflected here in GC. Now, the same thing kind of applies, right? The setup is kind of the same. There is a setup candle there for a nice fall through to the upside on a new trend change off the weekly, right? We put that there because it briefly crossed below, then crashed back above. Moving averages are lagging indicators, and they do tend to kind of give fake signals sometimes, because it's changing real time. So with this pullback, it was a position for potentially to cross red, but then as price started to fall through, the moving average just kind of does pull up. And if you watch anything for a length of time, you'll see those moving averages kind of shift, guide up and down on the tail ends of them. This is why we kind of had that there. So gold, we've been in gold for quite a long time, and if you listen to the Fed, they're basically telling you they're okay with inflation in inflationary environments historically, like the Weimar Republic, and you look at Japan in the lost decade. Asset prices tend to rise and then kind of fall off a cliff, but certain asset classes are flight to safety. One of those flight to safety is kind of gold. There are other flight to safeties that people are considering now, like you have Bitcoin and Ethereum. We'll bring them to the front of the classroom. Okay. Uh, Bitcoin recently hit all-time highs about 3 weeks ago. So it's also reflected that people find value in Bitcoin during high inflation or a high inflationary and high risk period. We'll bring the VIX to the front of the classroom to illustrate that. So the VIX has been relatively low recently, but there's been some spikes into the 20s and mid 20s area, meaning that, hey, during these periods when there's massive selling off in the market, people have no problem flying to safety to something like gold and silver. If you compare gold to, let's say, for example, the SPY, right? SPY has been kind of treading water. Not really. It did retouch highs, but it's kind of in this kind of rotational period between that 580 level and that 609. So this period of rotation is it's not really advancing. Where if you compare that same time period, right, to GC, right? Look what's happening, right? Kind of treading water, but then it really did start advancing. So it was kind of tracking with the market for a little bit, but then has since really pulled away as people are looking more for flight to safety if the overall market is going to tread water. So um, shout out to gold there. Now, as of today, and we can go look at some other stuff. We go to CCI, see how that's doing, SMC, right? So CCI, it's kind of treading water. We are in profit as of right now, looking to see a push down to the lows there. So we're nothing really to do there, just to be patient. Remember, we have this for 3 weeks, and it might just tread water. We also are selling contracts on QQQM. So we're selling contracts, like you got covered, I believe, like covered puts, so to speak, and those are, I think, 70% profit as of right now. So we're just gonna let those work. We also had some at the top here. I'll bring it to the front of the classroom at 2225, but I think the remaining time is like 17, 16 days. So plenty of time to kind of work through. It did kind of get close. We went on and took it off, but these down here are definitely in profit. Oh, we already brought Disney to the front of the classroom. Sorry. ASML. ASML is one that we're watching pretty. We kind of want to start setting up into a buy bias for ASML. If we get a trend change here, definitely look for us to be a buy. We actually might even take a position if we see a nice juicy setup candle break at the 745.99 level. So ideally, we want that to break to the upside. We'll be a buyer in ASML potentially for a new trend change, and then we'll accumulate some funds and get that in as an actual trade. But we want the contract on that ASAPidly pronto if we get that break. Buy bias is good. Also, another buy buys play that we are looking at, you guys have been tracking with us, is Boeing. So the Boeing company kind of had a buy buys here, wanted to accept the risk there, and then as it trend changed, we wanted to took some more, and then now Boeing is doing pretty good in a nice uptrend. Earnings doing a lot better from -10 to -5. Still negative, but it is advancing. The good thing I want you guys to know, right, with Boeing, what Boeing really is and why we have a buy bias is based off the principles of like Buffett and it's been talked about in a lot of investing books. When there's so-called blood in the streets, buy or chase a crisis. You're almost like an ambulance chaser in a way, because Boeing had said what that they said that they're gonna have layoffs. There's a lot of bad news, a lot of bad press, and then they start doing things like changing the CEO and reworking their quality assurance standards. So there's a pretty big moat around this industry. There's only three big companies, one Airbus, Boeing, and then you have a new Chinese People's Republic of China uh, company that's also being established as well. So the moat is going to be extremely large for those who have the capability and scale to make this business feasible. Because the airline business, it's a sunken cost business, and it takes a lot of energy to see profits. So Boeing overall is something that we want to take hold of after this massive sell-offs and bad news. Another one that we took chase bad news on is UNH. And these are just lessons here that bad news, if you're chasing bad news, is not necessarily bad forever. And that's why having that kind of fore and post site is good, right? The bad news in UNH about their CEO passing as the stock fell through the floor. And then we saw an opportunity to pounce for a recovery, at least back to the 8 p.m. moving average, which it did. And now it's kind of back to the cloud. So a reversion to the mean trade, chasing bad news, is also good. You just have to be a little bit more patient for things like that. But these large companies provide large services and solutions for people, and bad news increases volatility and makes a profitable pocket for us to go ahead and capitalize on a move. Now, even saying said that, it doesn't mean this is 100% guaranteed. It just means that if you're chasing bad news, wait for the recovery when it happened. At least take the highest probability set that you can get. For us, that was just reversion to the mean. We took that very nice profit, and then because it was the highest probability setup, it fell through maybe for continuation of the downside. But we were already out. Like we were already out. We bought here, setup candle got washed, reversion to the mean, boom, and we're out at the 8 p.m. moving average on the weekly. So the highest probability setup that we could take, we took, and that's a good look, guys. But that's going to be our video for today. I want you guys to kind of keep in mind that the trading, it has inherent risk, and what we talk about is by no means financial advice, but we want to tell people that this education can be had. You can get books, buy courses, really learn the skill, because if you can learn this skill is something that they really can't take away from you. Also, the barrier to entry for this versus other asset classes is extremely low. You can start for futures for as low as $500. I don't recommend that, but you can start futures for as low as 500 to $1,000, and really, if you know what you're doing, really make that pretty cool reality. Whereas if you wanted to get into, let's say, real estate, right, at entry level, even if it's bird dogging, you could take that skill set and work that, but it's gonna be hard for you to accumulate uh a substantial amount of growth and wealth without taking a lot of time out of your day. So unless you have the tools, which the tools cost money for you to be a bird dog effectively, I think the minimum tool is like $2,000 that I've seen that actually would make it a business for you to acquire bird dogging properly to get into real estate. If you want to actually own property, if you do it through an MLM, it can cost you anywhere from 300,000 to like $500,000 to own one property. Even if you're doing liens, most of the things that are on liens, I mean, yeah, it's a really rough world out there because you're going to auction, and some of the lowest I've seen at auction are 50,000 to $60,000 for auction. So even if you're doing liens, uh, good luck, right? So that's the barrier to entry for that. But this is different. Like you could start seeing 50 to 60% returns. The average winner is 20 to 40. Full disclosure, average winner for most profitable traders is 20 to 40%. And you can do that for as little start as $500 to $1,000. With compounding returns, that's pretty good. So this is probably and you can do this on your phone. You can do this with a telephone, really. Um, the barrier to entry, the skill sets, they're everywhere, and depending on how you play this, the compounds for the profits can be considerable, especially if you're doing dividends in a growth stock. Man, it's just some beautiful stuff. So, guys, I appreciate your time and expertise. Keep trading, keep grinding. This is 2025. This is our year for sure. We're debt free and we're gonna keep going. So, thank you guys for tapping in. We'll catch you on the flip side. Have a good day and goodbye.